Hey, you remember when we were roasting Vantage score, right? We were calling Vantage score the fico score. We were calling them the bootleg score. We were just roasting and clowning them all day long. But it looks like we can't clown them anymore. Why? Because as you can read on the screen, FHFA approves the Vantage score 4.0, right? 4.0, not 3.0, 4.0 for mortgages delivered to Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are basically the behind the scenes characters in the secondary mortgage market. We're going to talk about that. But in this video, I want to go over why, starting as of last October, basically 3 or 4 weeks ago, we got to start putting some respect on Vantage Score's name. I want to go over the differences between this Vantage Score 4.0 as opposed to the 3.0 and the other FICO scores that you see, all the other alternative scoring models that we've been seeing for the last several years. In this video, let's break down everything and let's talk about how it's going to impact your future borrowing pursuits, especially if you're somebody that's looking to buy a home in the next year or so. This is going to impact you. So let's talk about that today. All right, so you can see on the screen, I am on VantageScore.com. This is a press release that was released probably say 3 or 4 weeks ago. It says Vantage Score announced today that the Federal Housing Finance Agency, better known as the FHFA, they made a decision to approve Vantage Score 4.0 for use by Fannie Mae and Freddie Mac, the GSEs. So if you ever purchased a home before, you know that if you go to your local bank, you go to your local credit union down the street, right? You go ahead and you do the loan process. They originate the loan. You probably noticed that after you closed on the loan and you lived in the house for maybe a few months or so, you probably got a letter in the mail that said that there's going to be a new company that's basically going to now service the loan. It's like there was a handoff between the first bank that you initially went to get your loan to buy your home and now who you're going to be paying money to every single month. There was a handoff. So who controls that handoff? It's basically Fannie Mae and Freddie Mac. They're government backed. So 50% of every single loan in the United States, I believe it's 50, it might be even more now. Basically half of every single loan that gets approved in the United States, Fannie and Freddie Mae have their hands in the pot on this. What Fannie and Freddie Mac does is they go to the local banks where you went to, they take their loans, and then they ship them off to the secondary market. They ship them off to investors. That way, the small banks that we went to, the small credit unions, they make their money off the origination fees and they're able to now churn out more and more loans, originate more and more loans. That's how they make their money. And then Fannie and Freddie, they take those loans and they send them over to other investors in the form of mortgage-backed securities. So why am I even talking about the secondary market and mortgage-backed securities? I want you guys to understand just the importance of Fannie Mae and Freddie Mac. The fact that Fannie Mae and Freddie Mac is now acknowledging and now are going to accept Vantage Score 4.0, that's huge. This is going to be the first domino in a list of many that's really going to impact everything. How we get auto financing, credit cards, private loans, mortgages. The entire credit industry is now going to be changed now. And we've been talking about this. We've been talking about this for at least 2 years since I jumped on YouTube. I told you guys about FICO 10T, and I told you guys about Vantage 4.0. The FHFA's decision ushers in a new era for the mortgage origination market by creating credit score competition. What do they mean by competition? What they mean is prior to this announcement, if you were somebody that was looking to buy a home, you go to your bank, you call your loan officer, they're going to pull your credit scores and they're going to look for your FICO 2, FICO 5, and FICO 4. These are the old school score models. These are the scoring models that don't factor in things like rent reporters and rental karmas. If you remember, I went ahead and I reviewed a whole bunch of services like Rental Karma, I think Level Up, basically all of these companies that you pay them and they basically take your rent history. If you've been paying your rent on time for years, they go ahead and they take your rental history and they report it to your credit reports. That way you can get some credit. What I've been saying for the last 2 years was I'm not really a fan of those services, not because they're necessarily bad or they're scams. I didn't say that at all. I said it doesn't make sense for me to go ahead and spend money to Rental Karma and all these other people for them to report on my credit report. It's going to look good on my Credit Karma when I look on my app, But when I go to the bank and the bank looks at my credit score, a lot of the banks that were issuing loans, they were using FICO 2, 5, and 4. These old scoring models, they didn't recognize your rent being reported on your credit report. They didn't recognize your cell phone or your utility bills being reported on time on your credit report. So it was pretty much like it was invisible. So in my head, I'm like, what's the point? What's the point? You don't even need these companies. If the lender's not going to acknowledge it, I'm not going to pay for it. This is not big because if Freddie Mac and Fannie Mae are now acknowledging Vantage 4.0 as well as FICO 10T coming soon, I'm going to do a separate video on that. But now if the big players are now acknowledging this, it changes the game. So it does mean that more and more people are going to be able to get approved. You can see here on the third sentence, it says Vantage Score expands the scoreable population through a combination of analytically and empirically driven innovation that will now allow approximately 37 million newly scoreable consumers to have more equitable access to mortgages. A lot of people who study Dave Ramsey, you're anti-credit. You don't want anything on your credit, but you're still responsible. A lot of people who aren't following the practices that we're teaching here on this channel, getting your trade lines, getting your credit cards, getting your installment loans, keeping your utilization low, keeping the usage up a little bit so that we're reporting good data points over to the credit bureaus as well as the financial institutions that you're working with. There are millions and millions of people who aren't doing that. They're paying their bills on time, but they're not doing those things. They basically have a very thin credit profile. And if you have a thin credit profile in the eyes of FICO, you're not going to be able to get a loan. Or if you do get a loan, it's going to have crazy terms. It's going to have a high interest. You're not going to be able to buy the home that you want because you won't be able to afford the payments. This is going to change the game. This right here with Vantage is going to literally change how more and more people are going to be able to qualify for home loans. Machine learning technology. Computers learn from financial data, identify patterns, and generate credit scores automatically. Machine learning is giving consumers more credit access than ever before and giving lenders more opportunities to serve them. For example, when you go onto any website, you go to Chase, you go to Discover, go to Navy Federal, you try to apply for a credit card within a matter of 0.5 milliseconds, right? It's almost instantaneous. When you hit that submit button, they're going to tell you whether or not you've been approved or not. So how do they do that? There are algorithms behind the scenes that are looking into all the different data points that we talk about on Money Codes. Again, if you are not subscribed, make sure to subscribe to this channel. We do a lot of deep dives like this, so make sure you are subscribed if you are not. But anyway, these algorithms, these computer systems behind the scenes, they're looking for a whole bunch of different data on your credit profile. And all of these systems, whether it be FICO, whether it be Vantage, these systems were created for the lenders. They weren't created for you. They were created for the lenders, for the banks, to be able to look at your credit report very quickly and to be able to figure out whether or not you are a liability, whether or not you are a savvy borrower, whether or not you are high risk. They're trying to make it easy for them because there's credit card fraud, there's high default in certain areas. They want to make sure that if they are lending you money, they want to make sure that you're going to pay it back under the terms that you agreed upon. So these algorithms, they're getting more and more savvy, right? So the old school things of trying to get AUs added onto your account, they're not going to work. These old school methods of trying to game the system, finesse the system, those days are over with. Why do I mean that? Let's look at the trended data. Vantage Score 4.0 is the first and only credit scoring system that examines consumer credit behavior over a period of time instead of a simple snapshot. By doing so, lenders make more confident decisions. So you can see right here, the lenders are basically telling you this whole system, this whole game is for them. It's for them. They want to protect their own money. The days of them looking at one little snapshot, right? This is how they used to look at things. They used to look at your credit profile and just look at a little fraction of today. What does your credit report look like today? Now they have a 24-month look back period. So now they can see, what did you look like a year and a half ago? It's cool. It's cool that your stuff is looking good now. It's good that your credit score is solid now. What about 8 months ago? What about 12 months ago? What about 16 months ago? What were you doing with your credit card back then? This information, because of this new scoring model, this new algorithm, now they have a bigger lens to look at all the dirt you've been looking at, or possibly all the good that you've been doing. So do you understand now why I was telling you 2 years ago, look, I don't care, even if you're not in the market to apply for a car or a home loan or a new whatever, get a couple of secure cards, get a couple of installment loans, start adding some positive trade lines, because when it's time for you to start applying for whatever it is you're trying to apply for, if the 24-month look back period is now being weighted more, guess what? You now have more credit. If they look back here, if they look back here, if they look up wherever they look on the timeline, if you were doing the right things, you're going to look even sexier. So let's jump over to Credit Karma. They have a great breakdown of what I mean by this. So you can see here, Vantage Score 4.0 versus the other scoring models, right? So they're basically comparing Vantage 4.0 to Vantage 3.0 to the other FICO 8, FICO 9, 542. So utilization rate. If you've been watching this channel for more than, I say, a few months, every single video I talk about utilization rate. It's like a bingo card. If I mention utilization rate, take a shot, because I say it a lot. And the reason why I do that, look at this right here. It doesn't matter what scoring model. It doesn't matter what scoring model at all. FICO, FICO 9, FICO 8, Vantage 3, Vantage 4. It's always going to be very important. So if you are maxing out your credit cards, you're in trouble. There is no scoring model that is going to help you or going to mitigate the impact of high utilization. Keep your utilization rate under 30%. Ideally, stay between 1 to 9%, right? Don't let that cutoff date have your utilization be over 30%, 1 to 9%. Historical rate and payment info, trended data. This is big right here. Look at this. Let me zoom in. Trended data. All right, I just talked about this, the 24-month look back period. FICO 9, no impact. They're not really caring so much what your utilization was a year and a half ago, 2 years ago. Not really caring, right? FICO 8, not really caring. Vantage 3, it's not that big of a deal. Vantage 4.0 may affect your score. This is a change. Start changing your behavior patterns today. That way next year, 2 years from now, you have enough time. There's enough time here. Regardless if the lender looks at any point on the timeline, it's going to show you had great borrowing practices, right? So now you can already see that Vantage 4.0, they're changing the game. The collections account, I won't talk about this too much because I talked about how collections are going to be reported a little bit differently now with the changes that were made, I think summer of 2022. But just know that in a nutshell, paid collections, medical collections in general, they're not really going to impact us as much as they did before. What about the tax liens and judgment under the older scoring models? You can see here, they can have a significant impact, but with the new Vantage 4.0, they are less important than before, but can still have a significant impact. So you can see that there are still some tweaks here. Another big thing that we need to pay attention to, they probably talk about that here. Let me see if I can find it. Trended data, we already talked about trended data. We already talked about the tax lien judgments, medical collections. It can more accurately score unscorable consumers. I kind of touched on this a little bit, but again, all the people that were anti-credit cards, all the people that were anti just credit in general, you're not going to be able to see more services. You're not going to be able to see in these new scoring models, the rent reporters, the rental karmas, the rent reporting services, the services that are going to be able to report your cell phones, your utility bill payments, your rent payments. You're going to see more and more companies come out to be able to effectively report that. And now you're going to get credit for that under Vantage. So whatever you're doing right now on your credit, this whole Vantage 4.0 and FICO 10T, I'm going to do a separate video on FICO 10T, but it's basically the lenders are now able to take a magnifying glass and just look and see more of whatever you're doing. So if you're doing good things right now, if you have good practices, it's them just magnifying your good practices. You're likely going to see a score increase. If you've been doing some craziness, if you're trying to just rely on credit sweeps, that's another thing. Credit sweeps. If you had a history of just doing bad things on your credit report month after month after month, and you're someone that tried to do the credit sweeps, and I already debunked why you should not do credit sweeps. Ethically, legally, you got the feds knocking on people's doors, asking people questions because they're filing false police reports, trying to just scam out of it, or you're trying to get an AU, an authorized user. You had a whole bunch of crappy credit, and then you think you're going to pay somebody, and then over the weekend, you're just going to change your entire credit report. That's not going to happen. Those days are gone. Like I said, 24 months. So just because you pay somebody to do a credit sweep this weekend, or you pay somebody to add a couple of AUs on your credit report this weekend, cool. But now they're still able to see what your credit report looked like 3, 6, 12, 18, 24 months. They're still able to see that information. So this overnight hack, it's not going to work as effectively as you think it's going to work, right? So that's pretty much it. That's the end of my rant. Hopefully you got a couple of gems from this. And aside from that, I'm going to catch you guys in the next video. Have a blessed one. Peace.